Blackstone is a dying empire. For the last 4 decades, it has slowly gobbled up power, held it ransom, and acted directly against the interests of everyone who falls under its grasp. They blew up to be one of the only $1 trillion businesses the world has ever seen, whilst their lobbyists and owned media celebrated their growth, hiding and disguising everything they did wrong. But independent media finally caught up to them. Governments are turning inward and shunning foreign megafirms at fear of revolutions at home, and as never-ending debt machine grinds to a halt, Blackstone's entire model begins to fall apart, which is exactly what started to happen over the last couple of years. This video will expose the cracks and the fall that only just started, and I'll also shed light on a $200 billion per year industry that's exploding with growth that I've been building within for the last couple of years, and how you can get in on it too, but more on that later. Blackstone are now very well known, and you likely know who they are and what they do, but that wasn't always the case. They only actually went public in 2007 when they raised $4 billion for their private equity dealings. They ran a couple of leveraged buyouts, a massive office REIT for $36 billion, Hilton Hotels for $26 billion, and they had grown to $300 billion in assets under management by 2014, doing much more than just leveraged buyouts. By 2023, and it was then a $1 trillion company controlling huge businesses and interests all over the world and in vital industries, and it's now still the single largest private equity firm and real estate investor in the world. Now, what's never mentioned by the legacy media is how they managed to achieve this. How the media has been hiding any and all concerns about their power and that power's impact to the free market, and how they've been able to simply lie about unrealized returns to investors to drive more investment, much like a Ponzi scheme. And the truth here is that Blackstone is deeply intertwined with government at every level, essentially lobbying on a whole nother scale. Blackstone isn't just paying people to follow congressmen around to try and pay for their dinner. Blackstone is literally hiring ex-senators and congressmen to work for Blackstone as full-time employees. And then on the other side, Blackstone's also sending its own staff out of the business to go work for governments in various capacities, where Blackstone then gets an incredibly close relationship with the powers that be. Stephen Schwarzman, Blackstone's CEO and founder, was named co-chair of America's Strategic Policy Forum back in 2016, and he was on another economic task force during the COVID pandemic as well. He donates tens of millions of dollars every single year to various politicians, never picking one side, Democrat or Republican, but playing both sides as well as he can instead. And that absolutely pays dividends, because in 2020 he was able to successfully lobby a carried interest tax reform out of legislation that would have reduced Blackstone's profits. Blackstone's vice chairman is Tom Nides, who was US Deputy Secretary of State under Obama and US Ambassador to Israel under Biden. What does he know about private equity? Well, likely not a damn thing, but he's well connected within politics, and that's why he's got such a high-profile role at Blackstone. Blackstone has mastered the art of hiding in plain sight and buying favor with the US government, which has allowed them to grow to hold more than $1 trillion in assets. Now, a big part of the reason why this has actually been possible for them is because of a media blackout from the legacy outlets for anything critical related to Blackstone or private equity at all. On the rare occasion that you do read something from the Wall Street Journal, Financial Times, or Bloomberg about Blackstone or other private equity firms, well, it's about their achievements or a new milestone that they've reached, a new height of assets under management accomplished, and they'd never dare say anything negative when so much of the media is literally owned by private equity. When new independent media speaks out, Blackstone leverage everything they have to aggressively contest them, calling on their legacy media to rebuke everything they can and running PR campaigns to try and change the story in everyone's minds. Now, that media blackout, funnily enough, is the exact reason I'm sat here talking to you, because I started this channel with pretty much the sole intention of exposing globalism and globalists and helping to shift the Overton window. But I've also spent the last 4 years of my life now trying to protect myself from those shadowy figures at the top of it all, after numerous attacks against this channel and my livelihood on the whole. And I ended up discovering the exploding online education industry, which is currently worth more than $200 billion a year. And I run another business called Grow Coach, where we help experts and enthusiasts to build or grow their own online coaching or consultant businesses to 6 figures a year or even above, purely online. Now, if you are an expert or an enthusiast in any niche or any interest, there are people out there desperate to learn from you and willing to pay thousands for the privilege. You just need to know how to build and sell an offer in this space. And for that, I made a free guide explaining exactly how this industry works and how you can build your own 6-figure online coaching or consulting business. The guide is 100% free, and you can download the step-by-step guide in the description down below if you want to learn more. Now, the end of the legacy media blackout against Blackstone and private equity firms is really where everything started to fall apart for this industry, with new independent media speaking up against the behemoth without having to hold their punches because, frankly, we're not owned by private equity or anyone else. When you see someone like me speaking on YouTube, we are the ones who get to decide exactly what we say, and we are responsible for making or not making any money ourselves. And criticism started off very heavy-handedly attacking Blackstone in particular on YouTube and Twitter. But it quickly spread, which isn't surprising because YouTube sees 2.5 billion unique users every month, about a third of the entire world. So when independent media uses YouTube to spread their message, the legacy media has no choice but to follow and jump on the bandwagon. Journalists are now out there calling private equity firms like Blackstone cultures and vampires for sucking the life out of previously good companies. HBO's Last Week Tonight show ran an entire episode dedicated to attacking private equity and their role in the disastrous healthcare industry in the United States. And mainstream press outlets had their hands forced and had to address the huge issues of Blackstone and countless other PE firms buying up residential housing all around the world and contributing to the housing crisis. Often these private equity firms buy huge quantities of homes, doing single deals for thousands of homes, meaning that they get huge levels of negotiating power. So it turns out they aren't actually buying up homes at market rates or above market rates, they're buying well below market rates, and house builders really need the stability of knowing that their current development is going to be paid off so they can start with the next one, so they end up feeling forced to accept these huge deals at discounts. Then ordinary people have no way of competing in this market, so they get squeezed out and sent into the rental market instead, and then that rental market, it then behaves like a monopoly, but where there's only one seller instead of one buyer. So the PR firms and Blackstone in particular have pricing power of rents in areas where they own huge amounts of real estate, and they hike rents by as much as 30% or even 50% in some places after already buying up the homes at a huge discount. This grew to be such a huge issue that 28% of all new homes built in the US were being bought up by institutions en masse in 2022. And this was too big of a problem for even the legacy media, which is owned by private equity, to hide. As soon as they saw it being discussed by independent outlets and media channels and seeing how much distaste it was building, the legacy media had to jump on the bandwagon and publish news about that as well. And then that continued to trickle down until private equity as a whole and Blackstone as the single biggest private equity firm in the world found themselves in the firing line for their other misdeeds as well. Buying up healthy companies which were essential to a local economy and then outsourcing all that labor overseas, shutting down factories and destroying a local community, all in the name of globalization. Leveraging up previously safe and secure businesses with billions of dollars worth of debt so that the private equity firm can pull out their entire investment out of the business within months of actually investing, and then leaving the company to drown under that new debt. Or just selling off assets that were essential for the business to operate, only to then force that business to lease those assets back again, just so the PE firms could extract wealth from their investments at the cost of the business and everyone working there. This slash and burn policy used to go entirely unnoticed, as the legacy media that's heavily owned and influenced by private equity didn't want to tell people what was actually going on. But new media forced their hand once more, and we ended up with the population finally learning what firms like Blackstone actually do. And so this massive amount of negative press has severely damaged Blackstone and almost every other private equity firm as well. They were losing favor with governments, and they had to back out of deals and strategies that were making them billions of dollars in profit. But the biggest problem currently facing Blackstone and private equity hasn't even been touched on yet, and that is the end of globalization and an economy that private equity can't profit off of anymore. Investors are more and more fearful of sending their capital overseas when a little spat between their president and Trump could result in a 50% loss for them. And private equity themselves are fearful of outsourcing production to China to save on costs, when all signs point to sustained tariffs for years into the future that destroy any assumed savings by manufacturing outside of the country. Foreign direct investment across the entire world last year fell by 2% at a time where the global economy economy grew by 3.2% and inflation was 2.9%, so an 8% decline in real terms, and Europe alone saw a reduction of 14% in their foreign direct investment, not even taking into account inflation or economic growth. And when Blackstone and other private equity firms or just generic mega corporations can find deals that they want to run in foreign countries, they're being looked at with huge amounts of distrust. Take the United Kingdom as an example. They signed a massive £10 billion deal with BlackRock to build a data centre, and the Labour Party's polling in the UK fell by 3% across the board because British people don't want BlackRock owning their local town. For all of its failings, democracy does provide at least some checks and balances against governments acting in the direct opposite interest to its people, and that's with the prospect of re-election. And the final nail in the coffin here, it's a bond market in perpetual crisis. Interest rates are high and staying high, meaning those massive multi-billion-dollar deals that Blackstone were doing every month a few years ago are 5 times more expensive to finance, making them riskier and reducing the potential payouts by a huge amount. A reduction in the appeal of US assets means that less and less investment is coming in from China, Japan, and Europe, to name just a few, pulling the purse strings on Blackstone even tighter. The average leverage used on a leveraged buyout over the last few years has fallen by 20%, and the equity cushions needed to finance those deals has shot up by more than 100%. And with the economies in Europe and Japan in complete turmoil, with no one sure what to expect in the US or China, everyone is cautious, and it's really starting to hurt Blackstone. Their returns are down, investors are pulling out capital and choosing to invest elsewhere, and for once, Blackstone can't really do anything about it. In essence, Blackstone was built on 3 core things: cheap money, global access, and silence, and all 3 of those key pillars are falling apart. Interest rates are up, capital is expensive, and deals are drying up too. Governments are fearful of backlash if they sell out their assets to foreign billionaires, and for the first time, people are paying attention. The media can't hold their tongue anymore, as even everyday people are waking up to the truth. Now, unfortunately, we ordinary people aren't immune to the global problems which are wreaking havoc for Blackstone, and that's essentially why I've spent the last 4 years of my life building an online business in the exploding education industry. And that's why I've spent the best part of the last 4 years building myself an online business in an exploding $200 billion industry, online education. My business Grow Coach helps experts and enthusiasts build 6-figure purely online coaching or consultant businesses without needing any experience as a coach or a consultant. I made a free guide explaining exactly how the industry works and giving you a step-by-step framework to build your own business within it. There's a free download link in the description down below if you want to learn more.